Okay, good morning, guys. So I will be giving you guys a brief analysis on a trade I took on BTC and I shared on Facebook right here. This is my entry and still swinging it upwards. So it's been a long time, but most of you guys know that I'm not always active on the chat. Busy with projects and be traveling lately. So we give you guys a brief analysis on how I took this trade and the reason why I took it. So first of all, it was shared on Telegram channel for people that were subscribed to it that I'll be expecting BTC to go bullish this month of September. So it was shared on the 2nd of September right here, and I said that 1 hour time frame sell side imbalance has been filled up. We'll be expecting bullishness this year. So I now said BTC buyers is bullish for this month. So now let me dive into the chart and we do the breakdown analysis right now. So I want you guys to understand something, just like I always understand about structure. So the same way I talked about it selling from this point is the same way that I identify it buying. Alright, so it's just like when you're marking a structure, you have this lower low, lower high, lower low. Now when you see a structural break, you're expecting to sell from this price, from the premium price, right? So you took a sell. But what happens when we have a price comes back up, we try to take a sell from that area of supply, and then price fails to break this low, then it now starts coming back. What do you think could possibly happen? It means that we could possibly be shifting, and the area where we sold from before, price will come to take that liquidity for the reason that price tried to sell from this supply zone but did not break a structure. So there's no confirmation to sell from that point, right? Since we did not break a structure, so we could possibly be shifting. So that is, by the way, another thing that gave a confidence is that we labeled our previous more highs and lows because this candlesticks are ranges, so that means we are inside a range. Okay, so this is the markout. Now we saw how it's sold off from this point but did not break this low, so the confirmation was seen when we run down to the lower time frame. Now this is it right here. It tapped this supply zone right here. This is where I shared that sell entry that I talked about on my Facebook page. It dropped downwards. The movement right here shows a slow momentum, which means there is lack of liquidity or there is lack of volume in the market. So it traded lower, did not break this low, but it did what? Swept a liquidity right here. It hunted liquidity right here. So in this case, it's kind of like when you use a line chart, you see that this right here. Okay, so that wick right here is invisible. So most of us already know that a wick is created for the purpose of what? Hunting liquidity or hunting stops, sweeping stops. Alright, so we can now run down to the 4 hour time frame and we can actually see it's very clean on the 4 hour time frame, right? So we dropped downwards. This is September, right? This is where September started. No, okay, September started the first week, then second week, right? Okay, still the first week, Friday 6th, the first week, then the second week opened. Now the interesting thing is that if you want to continue selling this market, just like we seen right here on BTC, we have this low, we have this high, we have this low, we have this high, we have this low. So the areas or point in which traders will want to take trades from will be one, this area where we're having a favorable gap or sell side inefficiency. That is where they would like to take the first trade. Other supply and demand traders, we say they want to take a sell from here. That is an area of supply that they would love to take the sales from, right? Then most traders, we still want to look at this point right here that they want to take a sell right here, right? So now what did the algorithm do? after a trade downwards, opened the second week of September, it traded higher. This is a little structural break. It filled up the sell side efficiency, refused to sell, and then it impulsively trade higher, violating whosoever is looking at this week as an area of supply. So that breaking was caused by this volume right here, this momentum right here, that took out the area of supply, leaving behind another inefficiency. Now if we run down to the lower time frame, we will see that this right here is an area of supply. We go to the 3-hour time frame, is a favorite gap it traded into. We go to the 2-hour time frame, we can now see that this is an order block right here, or an area of demand. Now this demand, what did it do? It violated an area of supply. So those that have read the flipping market PDF, which is very popular on supply and demand, is this entry is a supply to demand flip, right? So the supply got violated, it traded back to the demand, were responsible to violate the supply, and then use that to buy. That is a flip. So now if you want to have an entry, this is an entry right here. You have this liquidity assessment right here, which is telling you that price will take that liquidity, fill up this efficiency, 3 candles, all right, validate an order block. Also, most traders would like to see 3 candles. I don't like seeing just one single candle impulsively breaking a structure, because most of that is kind of like a fake out. It's used as a fake out. All right, so 1 2 3 candles, it has liquidity, price came back to it, fill up the inefficiency, and then tapped the demand zone that violated the supply zone and cleared this filled up this inefficiency from the sell side, right? So price trade backwards into it and went up impulsively. Now where was my entry? My entry was here, and it was when I see how it swept this liquidity right here. So if we go back to Facebook page, you will see something a little bit right there, because I know when I shared it right here. So if you pay attention to what I labeled right here, I labeled the opening price for 3rd week of September, and then I labeled Monday's open. All right, that is just what I use as a confluence. So if I was expecting to buy, I would want to buy below the opening price, right? So for a weekly candle to be printed, all right, so the 3rd week, all right, so that's, by the way, let me not talk about that one. So we talk about the most interesting thing here. Now what I have for my entry was seen on the daily time frame right here. So what did I see? All right, so what I see is me taking this out, and what I see is that I saw it shift a structure right there. So that right here is a breaking market structure. The lower time frame will show me a change of character. Top. Okay, so the areas that we have right here now is 1, the daily time frame favorable gap that was filled up and price traded higher to violate this high to break a structure. Likewise, also violating an area of supply or an order block. So this is for the case of the daily time frame. So you see how we are having those confluences starting from the monthly time frame, identifying that the month has started, we did not sweep previous month's low. The week of September opened and it starts to shift structure, right? Then we finally violate a key area, right? So now what we now have left behind is that of the daily order block. Now I did not just take an entry right there, I waited for a confirmation on my lower time frame. So these are the confluence listed right there, and the target will be this high. All right, that would be the high to target for price to go and take that liquidity from the high. All right, so we can now go back to the 4-hour time frame, and this is how it looks like on the 4-hour time frame right there. All right, so on the 4-hour time frame, this right here is a structural break, change of character right there, and We could also use this as a treasure character, break a market structure, break a market structure, right? So price should trade backwards to the origin, right? And that is where it traded into, that of the daily fair value gap. Now most of us could possibly refine, because I also did the refinement down to this point, right? But sometimes refinement, price doesn't go to that refinement. Okay, so it's either it tapped that of the higher time frame, or it will go deeper to tap that of the lower time frame. So I was just watching the price and how it tapped it from the daily time frame, then I will know if it was to buy. So the entry was seen on the lower time frame. So quickly run down to the lower time frame. If you go to my Facebook page, I shared that of the 3 minutes time frame, right? So this is the 3 minutes time frame. I saw how it tapped the demand zone and then took the buy. So how did I take it? Now when it comes to confirmation entry, you're expecting the price to sweep, to do a stop hunt plus a structural break inside of your order block. All right, that is how you confirm it. So this is where the entry was done. So at first I thought that it will fail based on how the price came back to my entry, because I entered right here, my stop loss is right here. So when it came back, I was like, maybe it will want to go deeper into that of the 4-hour time frame that I labeled, but then it continued buying. All right, so what is my confirmation entry? My confirmation entry is this right here, is a 5 minutes inefficiency that price filled up. This right here, it was the 50% of that. We will still go back to that. So this right here is what I label has a structural break, because of what, when price tapped the demand zone, what it did was this liquidity sweep. So that liquidity sweep is a very good confirmation for me, and seeing it sweeping this high, which is the major high from the 5 minutes time frame after price filled up this inefficiency, right? And then my entry was here. So if I go also to the 5 minutes time frame, you will see what I was trying to explain right there. This is it. Even if you go to the 15 minutes, you will see that inefficiency right there. So we hunt Friday's low. This low is Friday's low. We traded upwards, violating this, trade into the inefficiency. If we keep on going to the higher time frame, you will see that this right here was that inefficiency that was filled up, right? Then price slowed down, start to consolidate. Did it break structure? No. What it did was a sweep right here. So that sweep was like, I was like, all right, since it is a daily order block, price filled up inefficiency, but did not break a structure and did not give a confirmation to do what? To sell. So if I use my Fibonacci, you see right there is the 50% price traded into the 50% of the inefficiency. But what it did was a hunt liquidity sweep. It came back up, starts to range, confirms to me that I'm not going to sell. So I took a buy from this point. After I saw it tapped the first tap, starts to buy, and I was like, all right, that might be the confirmation. I took the trade right there when stop loss below. Then I went to sleep because it is midnight trade. So price came back again during the London session, I think. Yeah, before the London session, then starts to buy again. So so luckily it traded higher. Now my target, because I closed the trade, was a previous week high. That was where I took profit right here. So I would have hold this trade till the month ended, because that is how we always do it. All right, that's how we always do. We always hold to the month end, because that would be like a price delivery for the rest of the month. So but then have to be safe also to avoid being greedy. So take profit was done on previous month high, which is supposed to be, all right, because that is the recent high. So it's like saying a higher high, we trade a higher low, so we should take our profit from a higher high, right? That is how you should be taking your trades. Then you can now wait for a pullback and have another entry. So another entry was done right here. I did not take this one. This one was done on another block. If we go to 1 hour, right, you see another block right there. So this is it. So this order block was responsible to sweep this previous week high. So price came back to it, tapped it, and starts to buy, and that is it. That is just it. That's how it is being broken down. So that is how you need to understand what your structure means. All right, so most of you find it difficult to mark a structure just like this. I don't know why you call this a break of structure. That is not a break of structure. If you try and zoom out, you see the real highs and lows, right? This is a high, this is a low, this is a high, this is a low. This is like the original key areas of highs and lows. This is a high and this is a low. All right, this is a high, this is a low. Price broke that lower low, give us a new high, so we're expecting a new low. If I also use a Fibonacci to map out the highs and low, that should be around the equilibrium, right? Highs and low. So right there, so equilibrium and the 61.8 Fibonacci level. So these are the areas that we possibly want to trade. 50%, 61.8, and 79 Fib level. 79 is an extreme premium pricing, discount price to buy from. So that is just it. All right, you need to stick with your higher time frame to understand your structures. Mostly it is more cleaner when you are on the 4-hour time frame. After you start from your daily higher time frame, then the 4-hour time frame keeps it very clean also, right? This is your low, this is your high, and you're expecting a new lower low to form so that you cannot take your buy entry, your buy trades. So that is it, guys. Take care. See you guys next time. Be safe.